China's foreign trade has continued its robust growth with a 3.3% surge amidst the trade war with the United States. The results are considered a boost despite the previous forecast by analysts who credit the performance to several factors, including the China Belt and Road Initiative. Here's more on that.
China's Belt and Road Initiative has secured infrastructure development and investments across an estimated 152 countries. The plan has also supplemented trade, boosting China's economy immensely. However, the ongoing trade war with the United States has influenced a change in the dynamics. Various Chinese goods have been subjected to tariffs, which have led to markups of products.
The first reason would be that American companies have placed larger orders to make provisions and thus to make up for any price increases that could be experienced by products coming from China as a result of the trade war. The other reason would be that Chinese companies would have had time to find other markets, including the countries of the European Union, Africa, and Latin America. And these countries would have bought more than they did before. So these are basically the reasons that can explain the growth of China's trade balance despite the various U.S. sanctions.
The Belt and Road Initiative has offered regional connectivity as China pushes to establish a trading-centered network in global affairs. The country's economic growth has been accelerated by the potential rise in foreign trade. According to customs data, exports increased 6.7% in 2019, widening the trade surplus by 47.4%.
The most important thing in economic life is competitiveness, and Chinese economy competitiveness is now beyond doubt. China has several instruments that it can use. There is the efficiency of its economy and the currency, especially that the yuan has seen a slight decline. There are also major projects such as Belt and Road, which in terms of investments will allow China to make trillion-dollar investments over several years. China also has more than $3 trillion in reserves, so if it wanted to attack the U.S. currency, it would have already done so. I do not think we should be alarmed by the measures taken by the Trump administration because these measures affect Americans first. They will increase the prices of products imported from China, and it is the American consumer that has to pay.
In recent years, China has become one of the largest global trading partners. Its revenues are forecasted to grow with a potential increase in trade facilitation and in a bid to construct a unified large market. Thuli Shabalala, CGTN.
Meanwhile, the Office of the United States Trade Representative announced that it would delay the 10% tariff on some $300 billion of imports from China. Kagosi Motsoane is an international trade manager of Asia at Western Cape Investment and Trade Promotion Agency, South Africa. Motsoane says that the U.S. government's pursuit of unilateral trade protectionism would seriously damage the interests of developing countries and harm the global economy. He argues that the correct way to achieve common economic development is through collaboration.
We've seen a protectionist global climate does one thing. It hurts the developing world. It hurts countries that are on upward trajectories, which are still quite delicate. And often when countries close their markets off using tariffs, they make it difficult for countries A, developing countries A, to source the things that they need to allow that developmental process to take place. And B, what it ultimately does is it thwarts that progress. And so China's insistence and posture on an open economy, global economy, is one that is aligned to a lot of developing countries' economic strategies and ambitions. And so for us, that's the win-win.